The global financial landscape is a complex web of institutions that underpin the functioning of economies around the world. Among these institutions, banks play a crucial role in providing financial services, facilitating economic growth, and maintaining financial stability. However, there are times when even the largest and seemingly most stable banks face existential threats. Stay alert as we will delve into the precarious state of 9 big banks that are teetering on the brink of failure. In recent times, the United States has been grappling with a troubling development in its banking sector: the collapse of major banks. It is evident that the collapse of major banks is no isolated occurrence. Rather, it is part of a broader trend impacting financial institutions across the nation. The banking sector is facing challenges that extend far beyond recent events, and it is vital to understand the scope of this issue. The fear of a domino effect in the banking industry is not unfounded. When a major bank encounters insurmountable financial difficulties, it can set off a chain reaction, leading to panic among depositors, a loss of confidence in the broader financial system, and a subsequent rush to withdraw funds from other banks. This scenario has the potential to create a self-fulfilling prophecy, where the fear of bank failures becomes a contributing factor to their actual demise. Regional banks, often serving as the lifeblood of local communities, are particularly vulnerable in this precarious environment. They lack the extensive resources and diversified operations of their larger counterparts, making them highly dependent on the stability of their immediate surroundings. As major banks falter, regional banks find themselves caught in the crossfire, facing mounting pressure and uncertainty. The consequences of regional bank failures extend far beyond their balance sheets. These institutions play a vital role in providing financial services to businesses, individuals, and communities in specific geographic areas. Their collapse can result in reduced access to credit, job losses, and economic stagnation in the regions they serve. Small and medium-sized enterprises, SMEs in particular, rely heavily on regional banks for financing and support, and their survival is at risk when these banks falter. To prevent the unfolding of a dire scenario, regulators, government agencies, and industry stakeholders must take proactive measures. Strengthening regulatory oversight, enhancing risk management practices, and imposing stricter capital requirements on banks are essential steps to mitigate systemic risks. Moreover, regional banks should actively reassess their business models, explore opportunities for diversification, and improve their risk management strategies to better withstand economic uncertainties. Number 1. Deutsche Bank. Deutsche Bank, Germany's largest financial institution, has been under scrutiny for several years. A combination of poor risk management, legal troubles, and a shaky business model has put this bank in a vulnerable position. Persistent concerns about its capital adequacy and ability to weather economic shocks make Deutsche Bank a prime candidate for potential failure. Number 2. Commerzbank. Another German giant, Commerzbank, has also faced its share of challenges. Its dependence on the European economy, coupled with a fragile balance sheet, puts it at risk, especially considering the economic uncertainties facing the continent. The bank's share price struggles and ongoing restructuring efforts are signs of its vulnerability. Number 3. Wells Fargo. Wells Fargo, one of the largest banks in the United States, has faced a series of scandals in recent years, including the infamous fake accounts scandal. Regulatory fines, reputation damage, and leadership changes have eroded investor confidence. The bank's shaky corporate governance and questionable ethical practices make it susceptible to further turmoil. Number 4. HSBC. HSBC, a global banking giant, has been navigating a challenging environment with headwinds such as geopolitical tensions, compliance issues, and increased competition. Its substantial exposure to Asia, particularly Hong Kong, poses additional risks, given the region's volatility. SBC's struggles to regain profitability and adapt to evolving market conditions raise concerns about its future stability. Number 5. Barclays. Barclays, a British multinational bank, has been grappling with a tumultuous environment, marked by Brexit uncertainty and the COVID-19 pandemic. Its investment banking division has faced persistent challenges, and its share price has struggled to recover. The bank's ability to thrive in a post-Brexit world remains uncertain, making it a candidate for potential failure. Number 6. Credit Suisse. Credit Suisse, a Swiss banking powerhouse, has had its fair share of troubles. It faced significant losses due to the Archegos capital management scandal and the Greensill capital collapse. These events have highlighted weaknesses in its risk management practices and governance structure, putting the bank's stability at risk. Number 7. Standard Chartered. Standard Chartered, a British bank with a strong focus on emerging markets, faces headwinds from economic instability in many of its key markets. Its exposure to volatile regions like Africa and the Middle East, coupled with compliance challenges, makes it susceptible to unforeseen shocks. The bank's ability to maintain profitability in these markets is a growing concern. Number 8. Signature Bank. Signature Bank has traditionally focused on providing banking services to commercial clients, including businesses and high-net-worth individuals. Like all financial institutions, it faces a range of challenges and opportunities in the dynamic banking industry. The closure of Signature Bank by the New York State Department of Financial Services (DFS) on March 12, 2023, underscores the challenges faced by financial institutions in a dynamic and regulated environment. The involvement of state officials and their efforts to assume control of the bank indicates the complexities and considerations involved in such situations. There are a number of factors that contributed to Signature Bank's failure. One factor was its high concentration of deposits from cryptocurrency companies. The cryptocurrency market is volatile and has been plagued by fraud and scams. This led to concerns that Signature Bank's depositors could withdraw their money in large numbers, which would put the bank at risk of failure. Another factor that contributed to Signature Bank's failure was its high levels of debt. The bank had been borrowing money to finance its expansion and to invest in cryptocurrency companies. Number 9. Bank of America. Bank of America, one of the largest banks in the U.S., faces persistent concerns about its risk management practices. It has been grappling with issues like mortgage-backed securities litigation and regulatory fines. The bank's significant exposure to the housing market and its history of legal troubles make it susceptible to future crises. These challenges are multifaceted and underscore the vulnerabilities that banks are grappling with in the current economic climate. These challenges include rising interest rates. The banking sector is highly sensitive to interest rate fluctuations, and the recent surge in interest rates has created significant challenges for banks. Higher interest rates can lead to increased borrowing costs for banks, which can compress their net interest margins. In such an environment, banks may find it harder to maintain profitability, especially if they have a significant portfolio of long-term, fixed-rate loans that become less profitable as rates rise. An increase in bad loans is a concerning trend. The rise in bad loans or non-performing assets. Economic uncertainty coupled with the ongoing effects of the COVID-19 pandemic has made it more difficult for borrowers to meet their obligations. As a result, banks have experienced an uptick in loan defaults and credit losses, putting pressure on their balance sheets and capital reserves. With lower deposit rates, the banks generate income from the difference between the interest they earn on loans and the interest they pay on deposits. With interest rates on deposits at historic lows, banks have struggled to maintain healthy margins. Savers have been searching for better returns outside of traditional bank savings accounts, leading to a decline in deposits, further impacting banks' ability to lend profitably. Declining profits is a combination of the above factors that has resulted in declining profitability for many banks. Lower net interest margins, increased credit losses, and reduced fee income have all contributed to a challenging operating environment. As profitability diminishes, banks may face difficulties in sustaining their operations and meeting their financial obligations. Regulatory challenges: the banks operate in a highly regulated environment, and compliance with evolving regulatory requirements can be costly and complex. Stringent regulations aimed at improving financial stability can sometimes hinder banks' ability to adapt to changing market conditions or innovate their business models effectively. In response to these challenges, banks must adopt adaptive strategies to navigate the changing landscape. This includes diversifying their revenue streams, enhancing risk management practices, and exploring opportunities in emerging markets or new financial products. Additionally, banks should prioritize stringent credit assessments and prudent lending practices to mitigate the risks associated with rising bad loans. The potential failure of a major bank is a matter of concern for both financial experts and the public at large. The 9 banks discussed in this article face a combination of internal and external challenges that put their stability at risk. To mitigate these risks and prevent potential failures, regulatory bodies must remain vigilant, and banks themselves must prioritize strong risk management and ethical practices. Don't forget to hit the like button if you enjoyed this content. Leave your comments below to share your thoughts or questions, and share this video. If you want to stay updated with more such videos, make sure to subscribe to our channel. Goodbye for now.